Welcome back to The Deep Dive. It is Thursday, January 22nd, 2026. And I gotta say, even though the calendar insists we have one more day, the energy in here, it's undeniable. It feels like Mental Friday.
It really does. It feels like we've already crossed the finish line for the week.
We are so close to the weekend, so go ahead, put your feet up figuratively or, literally if your boss isn't looking, and let's talk shop.
It's the perfect time for it. The markets have been loud, a lot of noise, so it's good to just filter it all out and focus on one clear signal.
Exactly. And the signal we're tuning into today is a company that, for me, just always blurs that line between hard finance and pure science fiction.
Oh, yeah.
We are talking about Intuitive. Ticker is ISRG. They literally just dropped their Q4 2025 earnings report at 4:05 p.m. Eastern, so this is hot off the press.
The robot surgeons? It still sounds like something from a movie.
That's the thing. I mean, imagine telling someone 20 years ago a robot would perform surgery on them. It's a movie plot. But now, it's happening.
Right now, all over the world.
So, our mission today isn't just to read a spreadsheet. We're going to analyze what this report really tells us about the shift in medical tech. We'll look at the procedure surge, the rollout of their new flagship system, and, well, we got to keep it real, the headwinds, the tariffs looming over 2026.
That's the right way to frame it. It's a story of amazing innovation, butting up against the very real, kind of boring constraints of global economics.
So let's dive in. The report is fresh. When
Yeah.
you look at the headline numbers, what jumps out at you first? Because, man, the top line does not look like a company that's slowing down.
No, absolutely not. If you just look at revenue, the growth is, well, it's undeniable. So the fourth quarter of 2025, they posted revenue of $2.87 billion.
$2.87 billion.
Yeah, and that's a 19% increase compared to Q4 of 2024.
19%. That's the number that got me, too. Usually when a company gets this big, this S&P 500 giant size, gravity kind of takes over.
The law of large numbers.
Exactly. Growth slows to single digits. But they're pushing 20%. That tells me they are still in a massive expansion phase.
It does. It suggests the market is not saturated. And importantly, they're not just making money, they're keeping it. GAAP net income was $795 million for the quarter.
Wow.
Which is about $2.21 per share.
So they aren't just burning cash to chase that growth. It's a profitable machine. But here's the part I think people get wrong about Intuitive. The average person probably thinks the business is just, selling robots.
Right. Sell Da Vinci for a couple $1,000,000 and walk away.
High five the sales team. On to the next hospital.
That's just the visible part of the iceberg. If you dig into the report, that is not where the real money is.
Right. I was looking at that revenue breakdown, the money from instruments and accessories. It hit $1.66 billion this quarter.
$1.66 billion.
And that's up 17% year over year.
Exactly. Now, compare that to the revenue from selling the actual systems, which was, around $786 million?
So they make more than double on the accessories than they do on the robots themselves.
It's the ultimate razor and blade business model.
The absolute ultimate. The robot is the razor. It's expensive, sure, but the blades, those are the arms, the staplers, the little tools they use in the surgery, and they have to be replaced all the time.
That is the key. Every single time a surgeon sits at that console, Intuitive gets paid. It's recurring revenue. It basically turns a hardware business into something that looks almost like a software subscription.
Which brings us to the most important metric of all. I mean, you can sell 1,000 robots, but if they're just sitting in a closet gathering dust, you're not selling any blades.
They're not.
So, are the robots actually working?
That is the critical question. Utilization. And the answer is a huge, resounding yes. Worldwide procedures grew about 18% compared to the same quarter last year.
18% more surgeries. That means patients are saying yes, and surgeons are choosing the robot over their own hands.
Correct. And for the Da Vinci system specifically, procedures grew 17%.
Well,
so that core business is incredibly healthy.
Yeah.
But I think there's an interesting detail here about the hardware itself. You mentioned the razor.
Robot, yeah.
Hospitals are buying them, but they're buying a specific one.
I saw that. This feels like a massive upgrade cycle. Total placements were 532 systems this quarter, right? Up from 493 last year.
Right. But the mix has totally changed.
How so?
The market is aggressively, and I mean aggressively, shifting to the new model. Out of those 532 systems, 303 of them were the Da Vinci 5.
The Da Vinci 5. The new flagship.
That's the one. And just to give you an idea of how fast this is happening, in Q4 of 2024, so a year ago, They only placed 174 of the Da Vinci 5s.
Wow, so they went from 174 to 303 in just a year.
It's a huge jump.
That tells me hospitals don't just want more capacity, they want the new features, they want the new computing power, the force feedback. It's like when a new iPhone comes out, nobody wants the old one.
That is a perfect analogy. The Da Vinci 5 is quickly becoming the new standard of care, and it locks hospitals into that intuitive ecosystem for another decade.
Okay, so Da Vinci gets all the headlines. It's the big famous robot. But
Yeah.
there was another number in this report that I think is, in some ways, even more impressive, at least in terms of growth velocity.
Let me guess. The ION system.
The ion system.
Yeah, their platform for endoluminal procedures.
Endoluminal. It sounds complicated, but we're basically talking about navigating the tubes in the body, right? Like the lungs.
Correct. It's a robotic-assisted bronchoscope.
Mm.
It's designed to navigate those tiny, complex airways in the lungs to biopsy suspicious nodules. It's a total game changer for early lung cancer detection.
And the growth, I mean, it's just exploding. The core Da Vinci business grew 17%, which is great. Ion procedures grew by 44%.
44%. It's growing more than twice as fast as the core
Oh,
business.
that is just wild. It's a smaller base, sure, but that trajectory it's vertical.
It is. The installed base for ION, so the number of these units in hospitals, is now just shy of 1,000. It's at 995 systems. That's up 24% from last year.
This is so significant because it proves Intuitive isn't a one-trick pony. You know, they aren't just the stomach surgery company.
Right?
They're moving into diagnostics, into cancer detection.
It massively expands their total addressable market. I mean, if you can use robotics to diagnose cancer earlier and more accurately than a human hand can, you become indispensable.
It changes the whole conversation from how do we fix this to how do we find this.
Precisely.
Now, before we get too carried away planning the, robotic takeover of the world, I think it's probably a good time to hit pause for just a second.
Absolutely.
Because while these numbers are great, we do need to talk about what's coming next.
Yeah, the view from 2026 isn't. Let's just say it's not entirely cloud-free.
We'll get into that in just a moment. Hey everyone, just a quick friendly note here. If you're enjoying what you're hearing today and you like getting this kind of deep analysis without all the fluff, we'd love it if you'd subscribe to the channel, leave a like, and please tell us in the comments what you'd like us to tackle in the next deep dive. We read them, and we really want to know what you're interested in.
Yeah, your feedback is what shapes the show, so please keep it coming.
And one more thing in the description, you're going to find a PayPal link if you want to support this project.
Your contribution really helps us keep making content like this. We're not asking for much, just the price of a coffee.
Exactly, just a coffee. Thank you so much for your support.
Correct.
Okay, let's get back to the numbers. So we've established 2025 ended with a bang. Revenue's up, the new Da Vinci 5 is flying off the shelves, ION is on a rocket ship. It all feels perfect, but I'm looking at the 2026 financial outlook, and the tone, it changes a little bit.
It does. It gets a lot more cautious, and the first thing that really stands out is a deceleration in growth.
Right. We just celebrated 18% procedure growth for 2025. For 2026, they're guiding to procedure growth of 13% to 15%.
Which, to be clear, is still really strong, but it's a step down.
So why the slowdown? Is the market finally getting full?
It's a mix of things. You've got the law of large numbers we talked about. You also have a sort of normalization after the post-pandemic backlog. But honestly, the bigger story, the one that really matters for investors, is the macro environment, specifically tariffs.
The T word, it's everywhere.
It is. And for a company like Intuitive, it's not just a political talking point. It is a line item on their income statement.
I saw that in the gross profit margin guidance. They're projecting 67% to 68%.
Which is healthy. Very healthy.
It is, but they explicitly said that this range includes an estimated hit from tariffs of 1.2% of revenue.
Just think about that. 1.2% of what? 12 or $13 billion. That is hundreds of millions of dollars that just poof, gone.
It really just highlights the vulnerability of their whole supply chain. We think of Intuitive as this glossy Silicon Valley tech firm in Sunnyvale.
Right.
But they're a manufacturer. They make heavy machinery, and they don't make it all in California.
No, the report was very specific on this risk. They laid out their manufacturing footprint, and it is global. The majority of those instruments and accessories, the blades that make all the money, they're made in Mexico.
Mexico, okay. So any kind of border friction there hits their most profitable product line directly.
Directly. Then they make most of their endoscopes, the camera systems, in Germany. And they import certain materials from China.
Mexico, Germany, and China. That is That is a trifecta of trade tension right there.
It is. It just goes to show how global politics directly impacts the bottom line. You can have the best robot in the world, but if you can't get the parts across the border without a huge tax, your margins are going to suffer.
And they were pretty clear that if additional tariffs come into play, the impact could be material. They're basically saying, look, we can handle what's happening now, but if it gets worse, brace yourselves.
It's a very prudent warning to give.
Speaking of money going out the door, let's look at their internal spending. Because innovation isn't cheap.
No, it is not. Operating expenses are expected to grow between 11% and 15% in 2026.
Which seems to track with their revenue growth. So they're not letting costs get out of control, but they're not cutting back either.
They're investing. R&D, sales, regulatory stuff. But there was one specific expense I thought gave a really nice insight into the company's priorities. It wasn't about hardware.
You mean the foundation contribution?
Yes.
Yeah.
In Q4, they contributed $70 million to the Intuitive Foundation. That's up from $45 million in the same quarter last year.
That is a big check.
It is.
Yeah.
And while it's an expense, it's also very strategic. The foundation helps with training surgeons, with access to surgery in underserved areas. In this field, if you don't have trained surgeons, you don't have customers. So it's philanthropy, yes, but it's also building their ecosystem.
That makes a ton of sense. Okay, let's talk about the safety net. Because when we discuss risks like tariffs and slowing growth, the question is always, can they weather the storm? And looking at the balance sheet, wow.
It is a fortress. This is probably the strongest part of the whole report. They ended the quarter with $9.03 billion in cash equivalents in investments.
$9 billion. Just sitting there.
And their cash-generating machine. They brought in another $0.6 billion in cash just this quarter. And remember, that's after buying back stock and paying for all their capital expenditures.
They are incredibly liquid.
Extremely. In a world where interest rates are all over the place and trade wars are looming, having $9 billion in the bank is the ultimate insurance policy.
Right.
It means they don't have to rely on banks. If a competitor pops up with some cool new tech, they can just buy them.
It's a war chest.
It really is. It gives them the luxury to think long-term while other companies are panicking about next quarter.
So let's bring this all together. We have a company growing revenue at nearly 20%, rolling out a hit new product with the Da Vinci 5, seeing explosive growth in their lung biopsy unit. But they're facing a year of slightly slower growth and some serious tariff headaches. How do you sum up the state of Intuitive as we head into 2026?
I'd say they're transitioning. They're moving from being a high-growth teenager to a powerful adult. The growth is still stellar. 19% is amazing for their size.
It is.
The product cycle is working. But they are now so large that they're exposed to the macro world. They can't hide from tariffs or global economic slowdowns anymore.
They're a blue-chip titan now, for better and for worse.
Exactly. But with that $9 billion safety net, they're a titan that is very, very hard to knock down.
So here's a final thought I want to throw out there. We mentioned they have 11,106 robots installed globally now.
Yeah.
That is a small army, a fleet of robots.
It's a huge fleet.
Are we getting to a point where not having surgery by a robot is the anomaly? I mean, if the standard of care is shifting this fast, does there come a tipping point where manual surgery starts to look old-fashioned?
I think in certain fields we're already there. In urology and gynecology, if you're getting those surgeries done openly, it's becoming the exception, not the rule. And as they expand with Ion and into general surgery, that circle is just going to keep getting bigger and bigger.
And with $9 billion in cash, you have to wonder what's next. They've kind of conquered the abdomen. They're going into the lungs. What's left? The brain, the heart, microsurgery.
That is the multi-billion-dollar question, isn't it? They have the capital to go wherever they want. The next 10 years of this company could look very, very different from the last 10.
It's fascinating. It really is incredible to watch something that felt like science fiction become a line item on a hospital's budget.
It is. It's a real privilege to get to analyze it.
And with that, I think we reached the end of our deep dive today. We really hope you liked it, that you learned something new, and of course that you'll join us for the next one.
Thank you so much, and we will meet again very soon.
And remember, in the description, you can find that PayPal link if you want to help us out. Thanks once again.